Hey there, everybody. My name is Allison Ostrander, and I am the Director of Risk Tolerance here at Simpler Trading. And in today's video, I want to talk with you guys about a potential setup to consider on Tesla for this week. Now, for those of you who aren't aware, Tesla does have an event Wednesday for investors. And certainly, sometimes when you have events where news and announcements are going to be made, it can cause potential volatility to happen. So there is that. But let's also talk about the technicals and how that could match up with what we're seeing. So Tesla had a very strong run down last year into the close. It then had a nice run up into earnings. Earnings was positive, right? The market reacted strongly to that. And it continued to bring us up to where we have broken above the 100-period simple, and we have started to stall and consolidate around the $200 price level. Now, the reason why this is important is, for those of you who are not aware, the $200 price level has acted as a big support and or resistance level, depending on which side the underlying price is trading at, for the past couple years. So let's just pull up the weekly chart so we have a good idea. But here is where it initially broke above that $200 price level. Then you can see back in 2001, it kept coming down into that range and testing it, holding it as support. It came back down last year to test that range. And for a while, it did hold it as support. But as we got closer into the end of the year, you could see a battle that was starting to occur for several weeks, right? For about a month, we went back down and maintained holding 200 as support. But then all of a sudden, we started to break below it. And when we broke below it, that support ended up turning into resistance. We tested it again the next week and failed. And then we tested it again here and failed. And ultimately, that helped cause the rollover to the downside. So now in this current run up, we are basically right around 200. We're also right around technical resistance levels. And the question, of course, is, do we end up breaking above these levels, turning 200 into a confirmed stronger support level like it's attempting to be now? Or do we ultimately fail here and start to roll back over? Certainly this consolidation right now is allowing things like momentum to get a reset off of exhaustion, and we're starting to build into a daily squeeze. And we know squeezes can sometimes get a greater than anticipated move when they start to fire. So knowing that we're pulling back from exhaustion and we're building into a squeeze going into this event means that there's a good possibility that the event could trigger this squeeze to fire and in turn have us pop up, which now that momentum started to reset, there's at least a little bit of room for a potential run higher if that's the reaction to this news. Or we could start to drop down, which would only help momentum to reset more and get closer to that zero line possibility. So because we don't, or at least I don't, right? I don't have Elon on speed dial, so I don't know which way that this is going to move on the announcement, but there's a good possibility that we will get some volatility. This to me is a good contender for a compound butterfly setup. This is a class that I've taught over at Simpler Trading. And it's a strategy that we've actually used quite a bit last year. So for those of you who have been following along with me for a while, this may sound like a familiar setup to you. I oftentimes played it on SPX last year, but you can certainly play it on individual symbols like Tesla. So let's talk about how this might look on Tesla. The idea behind this specific compound butterfly strategy would be to combine two debit style broken wing butterflies, one on the put side and one on the call side, because the idea is we will get a volatile move ideally within the anticipated range for this week, which currently for this expiration is about a 14-point move, right? Give or take. Or we could see a bigger move than that, right? And so a debit broken wing butterfly can benefit because if we get the volatile move to where we go towards our short strike, it certainly allows for a great profit. But it gives us the forgiveness factor that if it's a bigger move than anticipated due to the squeeze, and all of a sudden, let's say we find ourselves dropping right back down into support of the 100, which is around 180. Well, if it goes completely in the money, it can still allow for a profit too. So in this case, I've gone roughly, the 14, 15 points out of the money, using my pin strike to be around 190, and then having the 195 and 187.50 be my wings for this butterfly. This creates a 5-point debit spread on one side and a 2.5 width credit spread. And right now the total cost basis is jumping around a bit, but let's just round it up, keep math simple, and say we get a fill at 80 cents, right? So currently, just off the one butterfly, it means that if we get the pin going into expiration, we have a max profit potential of 420. If we go completely in the money, then we still have a profit potential, which is the width of our spread, or rather the difference of the widths, right? So 5 minus 2.5 is 2.5. That's what it would cash settle for, or, settle for going into expiration. Plus, of course, we have to take into consideration our cost basis of 80 cents. So it would still allow for a $1.70 profit. But keep in mind, this is only one side of the trade idea because, like I mentioned, I am uncertain which way the market is going to react to this news. All I know is that there's a good chance that the reaction could be volatile. So let's set this up on the other side. If we go roughly 15 points higher, then we're looking at around a 220 pin. Great amount of open interest at that level, so I certainly like that. Sometimes those big round numbers on open interest can kind of act like a magnet for the underlying price, and that's where you find yourselves going into expiration. And then, of course, we want to keep the same spread width, so a 5-point debit spread combined with a 2.5 width credit spread to create that broken wing butterfly. And on this side, it's costing around 80 cents. So what does that mean? Well, it means the total cost basis of our trade for both butterflies is about $1.60. That means if we get the pin, it's going to be a max profit potential of $3.40. Not a bad risk versus reward. If it goes completely in the money on one side, right, because it's a stronger than anticipated move, then $2.50 minus $1.60 would still be about a 90-cent profit. That's still over a 50% return on risk. So once again, not a bad risk versus reward, giving us that flexibility of we don't know which way the move could go, but we know that there's a good chance that there could be some volatility. Now, keep in mind, you would still have to be okay with risking this amount. Let's say that this event, which typically sees some movement around it, let's say it's a non-event this time. Let's say the market has already anticipated what was going to be said. It's already priced in, and we kind of still just end up chopping around 200 and consolidating. Well, then you have to be okay with the possibility on losing on both sides of this trade. So please keep that in mind, that you still have $1.60 of capital at risk. The fun part of this strategy, though, can sometimes be when you have a reaction that starts one way, but then ends up flipping around by the end of the week. It sometimes gives you the possibility to take a profit on both butterflies. So something to consider as we play through this event on Wednesday. But I certainly think that this could be a contender strategy to keep in mind playing through the potential Wednesday announcement and into the end of the week. Thank you so much for joining me. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to y'all next time. Bye.
Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.